As the trading day begins, United States stock futures are showing signs of optimism, inching higher amidst a backdrop of renewed tariff threats from President Donald Trump. Traders are keenly analyzing the latest earnings reports from major tech firms, including the iPhone giant Apple. The Dow futures are up by 88 points, Standard & Poor's futures have risen 23 points, and Nasdaq 100 futures have advanced by 155 points. The previous day saw Wall Street's main averages climb, despite a slight pullback due to Donald Trump's comments on tariffs. Investors remained buoyed by an encouraging outlook from electric vehicle maker Tesla, which offset the disappointing guidance from software giant Microsoft regarding its cloud computing division. In the tech sector, executives from Microsoft and Meta Platforms expressed concerns over a new low-cost artificial intelligence model from a Chinese startup, DeepSeek. This news had sent shockwaves through global markets earlier in the week, prompting investors to reassess their strategies. Turning to Trump's tariff threats, he reiterated his intention to impose a 25% import tariff on Canada and Mexico, citing reasons related to illegal immigration and drug trafficking. Additionally, Trump suggested that further levies on China are still on the table, although details remain vague. In a separate warning posted on Truth Social, Trump cautioned members of the BRICS nations that they could face 100% duties if they attempt to undermine the United States dollar's status as the world's reserve currency. This rhetoric has left markets on edge, with investors concerned about potential inflationary pressures and the risk of an escalating trade war. Amidst these developments, Apple has found some relief as its shares rose in after-hours trading. Following the release of its quarterly results, the company's executives forecasted low to mid-single-digit sales growth for the upcoming fiscal quarter, surpassing analysts' expectations. Despite a small decline in iPhone sales during the key holiday quarter, Chief Executive Officer Tim Cook highlighted that new artificial intelligence features are beginning to drive demand. This positive outlook has alleviated some of the concerns surrounding Apple's flagship products, especially as the company navigates a cautious approach to artificial intelligence investments. As the economic calendar highlights the upcoming release of the December Personal Consumption Expenditures Price Index, economists anticipate a rise in the inflation metric. Predictions suggest an annualized inflation rate of 2.6%, slightly above previous readings, which could influence Federal Reserve policy decisions. The core inflation measure is expected to remain steady at 2.8% year-on-year, with a slight monthly uptick. Federal Reserve policymakers will closely monitor these figures as they evaluate the economic landscape and potential adjustments to interest rates. In another market segment, oil prices are edging higher, yet they remain on track for weekly losses amid ongoing trade tariff concerns. As of early trading, West Texas Intermediate crude has gained 0.2% to $72.88 a barrel, while Brent crude has risen 0.1% to $75.99. Despite the slight uptick in prices, both crude benchmarks are set to decline for the week, with Brent down 1.6% and WTI down 1.8%. However, January has brought some positive momentum, with Brent expected to gain around 3%, marking its best month since June. Investors are also keeping a close eye on gold prices, which are hovering near record highs. The uncertainty surrounding Donald Trump's tariff threats, coupled with the anticipation of the United States inflation report, is contributing to the precious metals' appeal as a safe haven asset. As we wrap up today's market overview, remember to stay informed and adapt your strategies. Don't forget to subscribe and like our channel for more insightful updates on market movements and economic news.